Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday, the 29th of October. I hope it finds you well out there. Hey, finally, the cold weather is going to be here in the Valley of the Sun. Going to be in the 70s. Everybody get out the jackets. Winter, well, I guess fall is finally here. I couldn't be more excited about it. Did you see the Dodgers laying the wood to the Yankees? Anybody but L.A. That's how we live here in Phoenix. It doesn't matter what the sport is, as long as it's not L.A. It looks like it's going to be L.A. They're up 3-0. College basketball is getting ready to start. We're in the heyday, right? So we got World Series, you got pro football, college football, pro basketball, college basketball, the election, and it's going to be Halloween in a couple of days. At least the good news for the parents and the kiddos out there. Looks like it won't be super hot on Halloween, so that's always a good thing here. Right? We worry about not how cold it is on Halloween. How hot is it going to be on Halloween? It should be a great one. We got a lot of things to talk about. The debt markets blowing up again. We have gold at a new all-time record high. Silver flying. Get ready. Boy, buckle up the bootstraps here. The Treasury announcing the refunding. Goldman Sachs out saying, hey, these banks are starting to run out of liquidity. We had 2 auctions yesterday. By the way, I think Thursday, the largest auctions ever are going to happen this Thursday. But we had 2-year notes, 5-year notes, 2 different auctions yesterday, and they were not good. And by not good, not only did they tail, the banks, the dealers being forced to consume more and more of these. And then this morning, China once again announcing, Jason, hey, guess what? We're going to unleash even more money into the system to get their economy going. It's kind of one of those things where the markets have been talking about issues with debt and how much debt. Boeing today issued over $20 billion of debt to stay out of a credit downgrade, as that strike seemingly will not end. And then China announcing over $1 trillion of debt that they're going to be unleashing on the markets. It really is. It's like a debt free-for-all out there.
Yeah, there's a lot of stress. There's a lot of entities. Every time I'm looking at the news, it's always, these guys are doing poorly, or these guys are doing poorly. I heard Germany's markets are going under, and right. China's looking bad, and it does. You know, it's funny because you would think that you can't really trust the news, can you? You can't really trust the news. So you think they want to report more of this. You know, we're always saying, how many years have you said that? You think they want people to know this stuff, but keep it nice and calm in the news cycle. I guess we got to wait till next week before we can splash a little more of this emergency onto people, Joe.
Yeah, and we'll see how it plays out. We remember that we got more economic data this week today, so this is jobs week. Okay, so we're going to get all the jobs data today, tomorrow, Thursday, Friday. Today it started with job openings, i.e. the JOLTS survey, a huge miss to the downside. So this is one of these weird things. And again, as Jason said, can anybody believe the numbers? People are out talking about nobody believes the numbers, and how inflation, the Fed manipulating and don't even put in the things that really matter that are driving a lot of this inflation. But the Bureau of Labor Statistics said job openings fell for 600,000 1,000 jobs from the previous month seemingly disappeared. And inside of the data, Jason, this takes us back all the way to 2021, the lowest amount of jobs. So remember 2021, everyone is finally reopening again, and, the COVID money and all that stuff, the lowest since then, and they were saying quits. Okay, so how many people out there are quitting their jobs? And according to the Bureau of Labor Statistics, that came to an end. So, Jason, it was one of those feel good if you want rate cuts. By the way, next week, not only do we get the election next week, we're going to get rate cuts next week. 95% chance, if you can believe that, 95% chance that they're cutting a quarter of a point. I've just got this feeling, I don't know anything, but why do I get this feeling the jobs data is going to be really crappy this week so they can give the Fed the ability to cut rates again? And here's the hilarious part. The bond market says we don't care. 4.33 right now on the 10-year note. Wow. This thing is out of control, going in the wrong direction, Jason.
Bank failures are coming. You've been talking over the last week about the unrealized losses, 8 times greater than the housing crash, the great economic collapse of 2008, Joe. The unrealized loss levels are at 8 times. It's not even close how bad it looks. And it's looking like, and I forget what they call the term where it looks like, Joe, the way they're going to try to solve this, especially with the BRICS and selling treasuries, is they're going to let the banks loan directly to the government. They're going to. I think we're up for some huge inflation next year if the banks are allowed to start printing the money by the Fed and the government's blessing, Joe. And then, the next government can just spend, Joe.
We'll be right back. Which bank's going to fail? I may have the answer. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Thursday. A quick look at the markets. The Dow is down 50 right now. Not bad. The S&P's up 6. The Nasdaq's up 70. The 10-year note, I'm assuming we're having some auction troubles again today. Right now, 434. So this is the highest that it's been so far today. 434 on the 10-year note. Crude oil's a little higher today. As we said, gold's at a new all-time record high, 2,770. Silver, get ready, 34.30 here. We now are looking for $35, a close above 35, and I think we're going to see silver off to the races. Remember, Lynette Zhang a couple of days ago increased her gold and silver forecast for the end of the year, calling for $3,000 gold and $50 silver. And again, there's problems here, right? That beneath the surface, places they don't want you to look. Listen, get distracted by your sports teams, get distracted by the election, get distracted by war. Pay no attention to the problems that are bubbling in this debt market. I'm telling you right now, you need to be more diversified. Please listen, please. Not just for me, for you, so you can be prepared for what is coming when this bubble bursts. Get up to 10.25% fixed rates of return with our friends over at YRefi. It's not correlated to the stock market. I'm telling you, the stock market, listen, it had a great year. It did. It did. Listen, a lot of people are saying Trump's going to win, and look at what they're doing. Look at what the 10-year note's doing. Look at what gold is doing. Doesn't matter if Trump, Kamala. You know, the banks proved that yesterday with those forecasts that they had. There's a problem. 95% chance of a rate cut next week. And they can't stop the bond market from going up. The yields keep going up. The Fed will have cut 75 basis points by next week. And yet the yield on the 10-year note will have gone in the other direction by that. That's a problem. Remember the uninverted yield curve now. We are really uninverted now. You only get 90 to 180 days. And we're going to talk about which bank may be next. Get more diversified. Do it right now. Because it's not like you can snap your fingers. It takes a minute. Check them out. Up to 10.25% fixed rate of return. InvestYRefi.com. Remember, you got to have at least $50,000. You can use existing IRAs. So I know a lot of you listeners out there, you got IRAs. You need to call us, put some of that into gold and silver. You need to call YRefi and get some of it over there and get as diversified as possible. 888-YRefi24. 888-973-3924. What was it? A couple of weeks ago, we told you about the fines imposed on TD Bank for money laundering. And again, I told you all then, that's going to hurt us more than anything. Article out yesterday, Silver Academy, talking about, is TD Bank on the verge of collapse? They are the 10th biggest bank here. So this one is way too big. You think about like Silicon Valley and Signature Bank, they're nothing in the size of TD Bank. TD Bank almost 3 times the size of Silicon Valley. And they're saying that the record fine, remember, over $3 billion in penalties. They're saying the bank is also suffering from huge unrealized losses on their balance sheet. And the FDIC, is it the FDIC? I think it's the FDIC, has now said, Jason, the problem bank, now they don't tell, why wouldn't they tell us? This tells you that the banks don't care about us. If they know a bank may be a problem, why wouldn't they tell the consumers, hey guys, hey, do you bank here? You may want to reconsider. No, they don't do that. Why? Because we want to protect the bank. They're now saying 63 banks. Here's the thing, though. TD Bank probably takes down, 1,000 banks. 1,000 banks. I've got a feeling this is going to be one of those overnight deals, right? Remember those overnight deals where all of a sudden it's Friday afternoon and by Monday morning, TD Bank is now J.P. Morgan Chase, right? And right. Some kind of backdoor deal. But in the article, because I say this to everybody all the time, you no longer, this guy, Dr. Mark Warner, it's so funny. The traditional view on bank deposits must change. What's he talking about? See, most people believed that when they deposited their money into the bank, it was theirs. It's yours. I can get it whenever I want. Good luck. Good luck. Matter of fact, you know why people don't change banks? Because it's a pain in the you-know-what. They made it so hard, nobody wants to do it. But here's what's funny. He let people know that when you make a deposit, it's not truly a deposit in the conventional sense, but rather an unsecured loan to the bank. Boy, I've been telling people this forever, and people get mad. Where is that? Show me the law. When did the government do this? And I just laugh. But you think banks weren't around before the United States existed? Are you kidding me? This has been banking law since like the 1400s. This is why banks are allowed to loan out the money. And Jason, we're in a period of excessive liquidity. Everybody, you guys know this. You know it. The amount of money that these guys have printed, the central bank, who's supposed to be, oh yes, we're the watchdog. They've broken every economic rule that's ever existed and gave us a line of BS about why it was okay. So I'll just say this. If you're at TD Bank, okay, I would highly recommend don't have a large amount of money in TD Bank right now. I'm just saying. Why? They got to pay a $3 billion fine, and they're not the size of the Big Five, right? $3 billion fine is huge to their ability to stay, within the system. And of course, the amount of unrealized losses. Jason, we talked about it yesterday. The amount of all of these banks are sitting on huge amounts of unrealized losses, and now TD Bank, they're going to be under pressure.
During the housing crash, over about a 6-year span, 500 banks disappeared. If you look at the bank failures in order, in 2005 and 2006, 0 bank failures. Now remember that, 2 years of no bank failures. Then we had 3 in 2007, 25 in 2008, then 140 in 2009, 157 in 2010. I mean, they were trying to get on top of this thing, and it just kept on going. There was another 92 in 2011, another 51, then 20 here and 20 there for the next couple of years, so over 500. In 2021 and 2022, there were 2 years, no bank failures. Then we had 5 in 2003, and we've got 2 this year. So it's not gonna be exactly the same. But as you're talking about TD Bank, Joe, that's exactly what's happening. And we're not going to have 500 this time. Unless this bank program where the big banks get to just crank it out and print the money and then loan it directly to the government with the Fed's blessing. Here's the good thing for the Fed on this situation. They're not printing the money. The big banks will be printing the money. Right now there's a rule you're not supposed to do that, but they've loosened that rule up once before. It's a bank term lending program or something it's called. If the banks start doing this to shore up whatever next year's government's going to be, Trump or Kamala, which are both going to spin out of control, then when things get crazy, the inflation gets out of control, it's not the Fed's fault, and who's going to rescue it? Who's going to buy up all the bad assets and all that printing? The Fed to the rescue, Joe.
The Fed.
This is what's coming. And it's going to be inflation like you guys have never seen. Gold at 2,700 or 2,800 is going to seem like the good old days from back in 2003, Joe. That's what it's going to start to look like in the next few years, Joe.
Goldman Sachs out today. The U.S. money markets this week are heading towards what is becoming an increasingly common month-end ritual. A sharp jump in overnight lending rates as Wall Street banks are continually forced to absorb huge piles of new treasuries. The treasury came out, oh my Lord, we need 800-something billion this quarter, 800-something billion this next quarter, 800-something billion, blah, blah, And of course we know that, okay, that's 800-some billion, not including wars, not including this, not including that, right, all that other stuff. And of course, don't forget, the next president, whoever that may be, what do you got, like a month to come up with a budget that we don't have? Yeah. The monthly bond sales are continually causing jumps in the secured overnight financing rate i.e. the benchmark for those repo auction transactions. This problem didn't go away. Remember what I told you. What was it? 3 weeks ago, right? Mark Cubana from Bank of America. The guy, I'll say this, he's probably the best of the best when it comes to what is happening inside of this trade. He's better at it than the Fed. Let's put it that way. He's been out, putting it out to anybody who will listen. We got a problem. Hello? Let's fly. I know how to do math. I know how many treasuries are going to be issued. There's nobody there to buy them. The banks are running out of money to buy them. This is what Goldman's talking about. Why are the rates spiking? Because the banks they have to have X amount of cash. And this is a huge problem. They're like, well, okay, which one do you want? Do you want us to have the cash? Or do you want us to buy the treasuries? Because we can't do both. That's the situation that they're coming in. And Goldman now, and again, we're starting to hear this all the time. It's talking about the settlements of these auctions requiring significant liquidity intermediation at a time when balance sheet constraints are likely to intensify. Listen, you got to remember, even the Treasury is in there fake buying. Let's not forget that as well to try to make this market seem like it's okay. Listen, how do you go bankrupt? Well, it's gradual at first, and then it's all of a sudden. And this is what Goldman's talking about. Hey, it's been gradual, but it keeps getting worse. 800-951-0592. We're going to help you get more diversified today. It's just going to be harder and harder and harder as things are starting to disappear across the board now. And again, as we get closer to this election, be ready for bigger premiums. You got to remember, too, the Mint's getting ready to close down. Get ready for 2025, in about another month or so. But let me just read you some of the things when I get these sheets. Out. Few live. 2-week delay. 3-week delay. 2 to 3 week delay. 1 week delay. 5-week delay. And it's across the board here. And we've been telling you, make sure you buy before this election because the premiums are going to go back to where they should be. But today what a great opportunity.
Well, and Joe, let me translate. Let me translate what Joe just said. The biggest, richest buyers in the country and the world are scooping it up with these low premiums while you guys are sitting around waiting to see what's going to happen next week for an election or what you think might happen with some war. Why do you think the premiums are so low? Because big buyers aren't going to pay big premiums, right, Joe? So when the premiums come back, that'll be when the biggest players have got their fill, right, Joe? And like you said, the Mint will start cranking out new product, and then suddenly the news will tell you how great it is to go buy gold even more than they're doing now. And that's when people jump on. They jump on a lot later than they probably should have. Now is about the last moment you got before that you're really going to see some higher prices, Joe. It's primed and ready.
That was on the gold side. Let me give you the silver side. 3 to 5 day delay. 1 to 2 week delay. Live, which means, okay, we've got those. 1 week delay. Few live. 1 week delay, 3 week delay, few live, 1 week delay, 2 week delay, 2 week delay. You get the idea. Today, we've got a great opportunity. These are XF. They're not quite AUs. I'm going to say they're XF. A lot of companies will say these are AUs. I'm not going to. These are $10 Liberty. So these are the old 1866 to 1907s. 1 through 9, $1,500, 10 or more at $14.95. And Jason, this is probably, if gold does what I think it's going to do this week, I think, depending on what the data looks like, but based on what I saw out of Jolts today, are we going to see $2,800 gold this week? If not next week, if the Fed is going to guarantee a rate cut, probably. Probably be the last chance to buy what I'll call a fractional coin for under $3,000 an ounce. I mean, listen, $20 gold pieces are $29.75. I mean, they're almost there. Gold Eagles are more. Gold Eagles are well above $3,000.
As gold has gone up this year, Joe, it seems like when there's a huge distraction, if there's a distraction in the news cycle, they like to let gold go up when there's something else to look at so that you don't really notice gold going up. Because as much as gold has gone up, it was almost like a quiet, roaring, new highs every month. So next week is the election. So it wouldn't surprise me if gold gets to 2,800 on Friday, and then we see even higher highs Monday and Tuesday while everybody's worried about who's going to get elected, Joe. We could see 2,900 next week. Certain things happen.
Do we need a Harris presidency to have gold go down? I don't know. That seems weird to me, but I don't think so. But listen, get in here. These are XF, what they call extra fine. That's the one grade below AU, almost uncirculated. These things are awesome. We got tons of dates. $10 Liberty half-ounce gold coins. Think about it. These things are going to be like way over 100 years old, and you'll be shocked at how good they look. 1 through 9, $1,500. 10 or more, $14.95. Tell you what, 20 or more, $14.90. There you go. 800-951-0592. Why? Well, Goldman wasn't done. They said that this week's pressure, we talked about the 10-year note today, right? 434 all of a sudden. What the heck is going on? We had 2 terrible auctions yesterday. Probably having another one today. They say that the combined gross settlement of $531 billion of Treasury auctions on Thursday alone will be the largest daily amount on record. So what does Goldman say? Man, we've got this huge, it's the end of the month. It's the largest pile of rollover debt that we've ever had to deal with. And they keep saying that it's fanning speculation whether or not there's significant liquidity in the Treasury markets. They brought it up QE. They're saying, listen, the Fed is still, they're still technically doing quantitative tightening. It's only $25 billion. They have basically now joined Bank of America in telling them, you need to stop. You need to stop quantitative tightening, and you need to start quantitative easing. In this, Dallas Fed President Lori Logan said last week these spikes aren't raising significant liquidity concerns. But then the banks responded. J.P. Morgan said these spikes are becoming more difficult to dismiss, and they're ingrained now into the Treasury markets, and they're saying it will only move higher and longer in duration over time, which makes someone hard for anyone to think that they should write off these spikes as temporary dislocations. So look at the banks now warring with the Fed, Jason, telling the Fed, dude, you guys are dumb. You're I get it. It's your job to try to remain calm. And obviously, listen, I think Logan put that statement out because they felt like they had to. I don't think she believes a word of what she just said. That's my point. And it was so funny that not only did Goldman tell him to stop quantitative tightening and bring in QE, now JP Morgan saying, hey, listen, guys, this is only going to get worse. Only getting worse. I'm going to tell you right now, think about what gold's going to do when they stop quantitative tightening. Think about what gold's going to do when they bring back quantitative easing. Jump on this thing. 3,000, it's not stopping there. 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. This is you know what, and I've been doing a lot of this lately, but I can't help it. It's an all-out buy today. All day. Put it away. These are extra fine, almost AU. A lot of people would say they're AU. We're not going to, doesn't matter. These things are going to be awesome. $10 Liberty. You're basically buying 2 10s for a 20. Jump on it here. 1 through 9, $1,500. 10 or more, $1,495. 20 or more. You buy 20 of them at $1,490, right? Just under $30,000, $29,800. Get it done. Be more diversified. Do you think these banks are kidding? Do you think Bank of America is kidding? Do you think Goldman Sachs is kidding? Do you think JP Morgan's kidding around here? You know that they only got about $200 billion in this repo facility. Thursday, they've got to roll over $521 billion, over $500 billion in a single day. No wonder why the rates are screaming. I mean, let's look at it. Budget deficits. Come on. It's ridiculous. I mean, right now, we're just doing ridiculousness. That's what it is. You know that show, Rob Dyrdek, right, and Chanel West Coast, and all these videos of people doing stupid stuff, right, and we laugh and think it's hilarious. That's what they're doing. We're doing stupid stuff. The only problem is it really isn't that funny. The Treasury announcement yesterday was an absolute joke. It's a joke. They basically said, hey, it's going to really be real close to adding $2 trillion in 6 months. Not quite. We're not going to predict that. We'll just say it's going to be $1.7 trillion. Okay. Wow. Thanks. That's so much better. The best case, I mean, blow a bunch of sunshine up my backside scenario. The debt's going to rise another $22 trillion in the next 10 years. That's horseshoes, rainbows, unicorns, right? All that stuff, $22 trillion, not even close. That's probably light by 50%. Probably light by 50%.
100%.
Right? Within the next 2 weeks, we'll have hit $36 trillion. We just hit 35. We're already at 36. The interest payments, I mean, keep driving up and driving up and driving up. It's over $8 trillion, and now for the first time, I've been doing this 20 years. For the first time, the Fed, not only did they lower rates this 50, got to remember, in the last, since Alan Greenspan, right? A 50 basis rate cut is like enormous. And they've been saying we're not done. We're going to keep cutting. And yet the rates are going the other way. It's a problem. It's a huge problem. Mostly because, well, gosh, it just adds, right? We've already now, 2024 will be the first year in government history that we've spent over $1 trillion in interest. That's interest payments. Jamie Dimon keeps talking about stagnation. He won't shut up about it. Could you imagine Bank of America, who I told you the guy's really good, we can spend $1.6 trillion in interest next year if the bond market has a problem. And by all accounts, they're saying it's going to have a problem. And the Fed, you need to do something. The Fed's funds rate. Morons. Oh, what's the problem? Or let's keep rates at zero. Let's issue more money than the world's ever seen because, it's COVID, right? Unleash it. Now the Fed's got a problem, doesn't it? Because the market, wait a minute, we're lowering rates. You don't go higher. No, you can't go higher. This is why I said quantitative tightening is coming to an end real soon. And quantitative easing is making a comeback.
Huge.
That's what's going to happen. The money supply, right? They're trying to, we pretended to rate it. Okay, listen, quantitative tightening, you reined it in by $2 trillion. And guess what? By the end of this, the balance sheet, which got to almost $9 trillion, I promise you, is going to be, $20 trillion? Something like that. They can't stop the money supply. They know. They can't do that. And then, of course, it brings you to inflation. I don't know if you've really looked. And I know people get caught up. Somehow, whether it's Harris or Trump, they're going to fix it. They have no power. And especially, let's face it, Congress is going to be divided anyway, right? I mean, at best, we've got 3 more votes than you do, right? I mean, that's going to be at best. This isn't going away. Here's the funny part. They're trying to claim victory when they know they're less than 6 months away from having to ramp up the money supply again. They're going to be forced. Gold, that's the winner. Gold and silver are the winners. 800-951-0592. Patriot Radio News Hour. Joe and Jason. We'll be back after the break. 800-951-0592. Final segment here on this Tuesday. $10 XF Liberties 1 through 9, $1,500. Right now, a regular $10 Liberty is $1,525. These are almost AUs at $1,500. 10 or more, $1,495. 20 or more, we'll take it all the way down to $1,490 at 800-951-0592. As concerns today from Goldman Sachs about these spikes in the bond market and these end of the months when the overwhelming amount of rollover comes. And this week, this Thursday, a new record, forcing yields higher, starting to question liquidity, essentially asking the Federal Reserve to stop quantitative tightening. They're only down to the $25 billion. And the need for quantitative easing. And then J.P. Morgan said, hey, the longer this goes, Jason, the worse it gets. And it doesn't stop because, let's face it, we keep issuing more debt. So these rollovers, they're never going to get smaller.
There's going to be a lot more debt in the months to come. You're going to see spending like you've never seen before. And usually there'll be some sort of emergency to kind of cover up all that spending or give it the excuse of why we have to do it. But, Joe, I do believe that the Fed, it's like It's like two kids playing with a BB gun, right? The Fed is one, the big banks is the other kid. And the Fed's the one holding the gun, right? The BB gun. He shoots out the car window on accident. And as people start to come to see what happened, the Fed hands it to the big bank kid. And then when everyone shows up there, they'll blame the big banks. Can you imagine if the big banks are given the ability to loan the government money? Donald Trump is a huge debt pirate. He loves debt. You know, him and Robert Kiyosaki sit around talk about how much debt they're in and how much money you make off debt. And if you don't understand how that works, you can get very, very wealthy leveraging debt. And Trump's going to be borrow, Joe. You can imagine if the big banks, he's just going to go to them. I'm president. I need money. Things don't look good. I need more money. And Kamala won't do any different. It's just that Trump is, he's considered king of business, right? So, he's going to have more sway when it comes to printing and borrowing more money. And the Fed will just sit on the sidelines while this is happening and claim no responsibility for this, when it'll be completely their decision to let this happen, Joe.
Donald Trump, remember when he said it that one time? Well, maybe we'll pay the debt, maybe we won't. We'll file bankruptcy, right?
There is that. There is that, right?
When you start thinking about the digital dollar and everything else, right? Maybe that's the intent. I don't know.
That could start a war, huh?
Boy.
Hey, China, we're not going to pay you back anymore. Suck on it. And everyone would be like, yeah, China sucks, man. Go away, China. Yeah, no, we're not going to pay you back. You guys are stealing from us. I can see it right now, Joe.
800-951-0592. Jason and I, we're coming right back with the half-empty cups.